Good morning, students. Let's start with unit number 3, government budget, unit number 4, government budget and the economy. So what are the main objectives of this chapter is introduction, means what is meant by budget, government budget, meaning of government budget, objectives of the government budgets, components of budgets, what is revenue receipt, what is capital receipt and what is budget expenditure, and the measure of the government deficit. These are the main objectives of this chapter. First of all, we will go through on the meaning of the budget. What is meant by budget? Actually, the term budget is derived from the French word budgeting, which means the leather bag or a wallet. It is a statement of the financial plan of the government. So you can say like that, Renew Astronomy said that a budget is a document containing a preliminary approved plan of the public revenue and expenditure. Or you can say like that, government budget is an annual statement showing item-wise estimates of the receipt and the expenditure during a fiscal year, means 1 year. For example, it starts from, in our India, it starts from 1st April and it will be finished on the 31st March. So in the fiscal year, whatever the receipt we are getting, the government is getting, and what the expenditure government is doing, all that things comes in the budget. So these are the main things, definition of the budget. Main important points of the government budget are: budget is prepared by government to all level, that is the central government, state government and the local government prepare it respective annual budgets. However, we restrict our studies to the budget of a central government known as union budget. So first of all, they said us the what is meant by union budget. Sometimes the central, whatever the budget prepared by the central government, that is called union budget. All the governments at their level, they are making the budgets. Even the local government is also making the budget, the state government is also making, and the central government. So the central government budget's name is union budget. Next is estimated expenditures and receipt are planned as per objective of the government, means whatever the objective of the government for receipt and for expenditure, they are just estimated for that. Okay, it is not real but it is nearby the real. In India, budget is presented in parliament on such a day uh, as the president may direct it by convention. It is present on last working day of February each year. So, and that is presented by the financial minister. It is required to approve by the parliament before it can be implemented. Means those who are in the parliament, either in the opposition or in the government side, they have to be just approve that. After then it will be started. There are some objectives that we are discussing here. It is very important question, that what are the objectives of the budget. So first of all, a reallocation of the resources. Through the budgetary policy, government aim is to reallocate the resources in accordance with the economy. Means to those who are for using for the profit maximization and the social priorities of the country, means for the public welfare. Government can influence allocation of the resources through. So what they are getting, government, how can they allocation the resources? What are the two resources of the government to allocate the money, allocate the amount for that? So the tax concession or subsidies, or directly producing goods and services. Tax concession. Tax concession means to encourage the investment, government can give tax concession subsidies each to the producer. So it will be discourage the government, but it will just promote the production, and it will be helpful for them. For the heavy tax, they have through the heavy taxes and encourages users of other products by providing the subsidies, for example, the cylinder. So what they are doing, they are giving the subsidies on the cylinder to us, to the local people. Next is directly producing goods and services. If the private sector does not take interest, government can directly undertake the production. Next is reducing inequalities in the income and wealth. Income in the economics, inequality is an inherent part of every economic system. So the government aim is to influence the distribution of the income by imposing tax on the rich and the spending more and more on the welfare of the poor, so it can reduce the gap. And in the budget they are just discussing about those points, and they are just try to implement the policies on that thing. Next is economic stability. Government budget is used to prevent the business fluctuation of inflation and the deflation to achieve the objective of the economic stability. Government expenditure and taxes can help in fighting the price fluctuation. Next is financial and management of the public sector enterprises. There are large number of public sector industries which are established and managed for the social welfare of the public. Budget is prepared with the objectives of making the various provision for making such enterprises and providing them financial help. Economic growth. The growth rate of the country depends upon the rate of saving and investment. So, for the purpose of the budgetary policy, aim is to mobilize sufficient resources for investment in the public sector. So, it will increase the public sector and it will increase the production. Production will increase the income. So, that is the main thing. Reducing regional disparities. The government budget aim is to reduce regional disparities through its taxation and expenditure policy for encouraging setting up the production unit in economic backward region.